Your business is making money, and now it's time to figure out how you pay yourself. Well, let's look at your options. So anyone who owns a business that's structured as a corporation has come across this issue of, well, how do I pull money out of my business into my personal account? Where do I even start? I've heard of salaries, I've heard of dividends, bonuses. I don't really know what is best for me and what I should be doing. Well, today we're going to talk about a few simple rules and guidelines that you can use, but obviously everybody's situation is different and it all depends on other aspects of your personal income and your family income. The first thing I like to tell people is it's very likely that you actually want to pull out less money than you think you do. Now, so many of us are used to kind of looking at our T4 slip at the end of the year and gauging how our year was based on what our personal income was. But as a business owner, as a shareholder of a corporation, you can actually take advantage of something called tax deferral. Now, what that means is, why would you pay tax now that you could pay later? Legally pay later, I should add. Small businesses in Canada are taxed at a relatively low rate compared to individuals. In BC right now, the combined federal and provincial tax rate of a small business is 11%, which is much lower than most people's personal tax rate. So that being said, you want to leave as much money in your corporation that has only been taxed at that low rate as you possibly can. So when you think about the amount to pull out, just think about the amount that you need to use on a monthly basis, anything that you might want to put in your RRSP for that year, or any other personal investments that kind of supports your own financial plan. But don't pull out anything just gratuitously. Just leave as much as you can in your business and wait to pay that additional tax until you absolutely have to. So once you kind of figure out how much you want to pull out of your business, you basically have two options. Either take a salary or take dividends. Now, the tax system in Canada has something called integration, which basically means that no matter how you pull money out of your business, no matter how a person earns their money, it should be taxed at approximately the same rate. So perfect integration would mean you would pay the exact same amount of tax regardless of how it was taken, by salary or dividend. Now, that isn't necessarily the case, especially because so much of your personal tax situation is based on other things, your deductions, any other income you may have. So for the sake of this discussion, we're not necessarily going to focus on the amount of tax paid. We'll look at the other factors. And you can speak to your advisor or your accountant for your personal situation to see which salary dividend mix may be most tax efficient for you. So first, let's talk a little bit about the benefits and the drawbacks of taking a salary. So the first benefit of taking a salary is that it's very easy. You can set yourself up in your payroll software to be paid every 2 weeks, the exact same amount, set it and forget it. There's nothing easier than just taking a salary and letting the payments and deductions happen. The second benefit of taking a salary is that you have documented pay slips and documented T4s that are really beneficial for loan applications. So if you're going to get a mortgage or another type of loan where the lender wants to see some documented income history, well, having been paid a salary over the past number of years is going to be really beneficial and just really easy for them to tick that box. Now, the third benefit of taking a salary is quite a big one actually for many people, and that is that it creates RRSP contribution room. As many of you may know, the amount that you're allowed to contribute to your RRSP is based on your previous year's earned income. That's what they call it. Now, earned income could be a number of things, but salary and bonuses are the primary ones. So taking a salary would actually increase the RRSP contribution room that you would have. Now let's look at the downsides of taking a salary. The first one, and this one is particularly key for small business owners, especially right at the beginning, is that you are contributing to CPP on both sides. The Canada Pension Plan payments, the employee and the employer contributions are being made by you. And you just may not have that money right now to spend on something like a CPP contribution. The other downside that's not quite as big of a factor, but is something that you could consider, your income taxes are deducted at source. So it doesn't really consider your other tax planning opportunities. Not a major factor, but something to consider. So now let's look at the benefits and drawbacks of taking dividends from your company. The first one is something that we mentioned in salary, and that is CPP contributions. There are none on dividends. So this can right up front save you several $1,000s. Another benefit is that it can be slightly more flexible. Instead of taking the amount every 2 weeks, you can just pull out money from your business anytime. And at the end of the year, you and your accountant can declare that amount that you've pulled out throughout the year as your dividends for that year, or any amount that goes along with your tax planning strategy. And the third benefit of dividends is that it can actually create the ability for you to split income with your spouse. Now, this is a very large and sensitive topic, and you want to make sure that you've gone through an in-depth analysis with your accountant, but this is a possibility. Okay, so what are the downsides of dividends? You're not creating any RRSP contribution room with dividends. Now, one thing to keep in mind is that this decision is not final. You're not making your salary or dividend decision now that has to carry you through the next number of years. You can make this decision year to year. At any point, you can start making a salary, you can stop making a salary, you can pull out dividends, you can change that mix. So in saying that you're not creating RRSP room does not mean that you're never going to be able to create RRSP room into the future. Now, one other slightly technical drawback of dividends, but it is worth mentioning, is that if you have a business partner or other people who are also shareholders of your business, you're required to pay dividends in the same amount per share to the same class of shares. So you may hold Class A shares, someone else may hold Class A shares. The per share dividends that you declare on those Class A shares always have to be equal. So what's my recommendation? Because that's, I know, why you came and why you've sat through this video. Since all of my clients are contractors and what we would consider small business contractors, if your business is at the point where a few extra $1,000 makes a big difference. So usually this is people who are kind of just in the infancy of their business or just incorporated, and they really don't have an extra few grand to pay in CPP contributions at this point. Just pay yourself dividends for now. Don't overcomplicate it. Just pull money out of your business. We'll declare the dividends at the end of the year. And in the future, we can look at paying you a salary or bonuses and start creating that RRSP room. Now, of course, if your business is a little bit bigger and a few grand is not going to move the dial too much, then there's really no downside to paying yourself a salary. You create that RRSP room. You then have the documented earnings with your T4s and your pay slips for your any loan applications. And if you have additional income that you want to earn in that year, you can just declare dividends for that additional amount. But you've been paying yourself salaries throughout the year in order to take advantage of the benefits of doing so. I hope this video was helpful in clearing up some of the confusion over how you can pull money out of your business. It's a huge topic and it really is individual to your situation. So if you're a contractor in BC and would like to offload the entire finance side of your business and just worry about the operations, please contact us. Go to our website, driveraccounting.ca. We'll be happy to discuss at any time.